we are recording today's session and it can be accessed at a later date. So if you have something you want to review again later, you can do that. If there's someone that wasn't able to join us and you want to share that link, it'll be on our website, so you can send them there. So we will work to do that this morning. So with that, Naomi, do you want to give an introduction of yourself if you want, pull up your slides, we'll get going. Okay. So this morning, it's going to be pretty conversational, everybody. So
yeah, definitely jump in. Yes. For sure.
So with that, I'll hand it over to you.
All right, thank you so much, ladies. It's good to see you virtually. I'm excited for when we can all be together again in person. So I know, just seeing the names that came across, I've met a few of you in the past, and know some of you even a little bit better than that. And then for those that are not familiar with me, let me just give you a quick background story on why I do what I do and how I got involved with it. So growing up, I grew up in the Madison, Wisconsin area. And my dad and my grandpa had a dry dog food business in our backyard. So I know that's kind of, you know, a little bit different. That was before, you know, the dog food and the pet industry is what it is today. But when we made this dog food, we would buy the corn and the soybeans to go into the dog food from my great uncles, so my grandpa's brothers. And they had a grain elevator and they farmed just a quarter mile down the road. And so they had about 5 million bushel capacity at the elevator. They farmed 3,000 acres themselves. And so it was really neat. Growing up, I got to see how my great uncles farmed. I got to see how they ran an elevator. I got to see how my dad and grandpa, you know, would buy corn and soybeans and make this product, make dog food. And then we had to turn around and sell it and market it. And so when I went to school, so like 95, 96, I was at college, and that was the first time that the price of corn had gone from $2 all the way up to $5, and the soybean price had a big rally. And short story long, my family was not ready for that price movement. It really affected our family, affected our business. And then when I went back to college and shared that story with my classmates in the ag classroom, they were all the same thing. You know, they were like, no, my parents are fighting too, because, you know, we sold the corn too soon if they had farmed it. Now the price had gone up. So it was that experience and the big, volatile, unexpected price swings in markets that really got me interested in being a commodity broker and working with farmers just to help be prepared for any of those scenarios that might fall going forward. So let me start to share my screen. And if you've got questions at any time, please do put them in the chat box, and then we will, you know, pause and we'll answer those questions as quick as we can also. So I'm trying to share my screen here. Okay, so I think it's in the transition process, so bear with me. Okay, let me get myself set up here again a little bit. So are we looking okay as far as seeing a PowerPoint in front of you?
Yep, we see the PowerPoint.
Okay, perfect. So we'll get right at it. We're gonna focus on corn, soybeans, wheat, a little bit of cattle also, and talk about what's going to be coming up this marketing year. So, you know, a year ago, COVID was just starting to happen. We didn't understand how that would affect the market prices and demand and the scare that happened with it. And then we went into the summer months and we were on the verge of corn futures going below $3, doom and gloom outlook. And we had talked with our clients, we're like, you know, the outlook right now is bearish, but if, you know, these 4 or 5 things could happen, that would turn the market around. Never thinking that those 4 or 5 things would actually happen and the stars would align, but they did. So those things were, of course, China did come in and buy what they said that they were going to be buying for the phase 1 agreement. They really got going with that. Then the derecho storm happened. And then we had that horrible, horrible August weather. And then, you know, the funds just started to come back into the marketplace. And then the USDA told the truth about these government reports. And they told the truth that the 2019 crop was a little bit smaller than people had, well, I would say most of the farmers knew that the crop was smaller, but they finally told the truth about it. So all of these little scenarios started to happen, and it just made the market do a 180-degree shift. So going forward, we're going to talk a little bit about politics today, where the global demand is at, where our supplies are currently located, and where they are here in the United States and around the world. And then we got to talk about the funds, because that's going to be a new fundamental of itself. So I don't want to waste any time. We have a lot to cover. And if you've got questions, like we said, just holler at us. And if you've got follow-up questions, feel free to email me or call me. I'm happy to help you out. Okay, so the first chart that we're looking at here is a continuous monthly chart of corn futures in Chicago. So every vertical black line that you see here is the high price of corn in Chicago for the futures contracts for 1 month. So this goes back to 2006. So you can see how the price of corn in 2006 was very low, closer to the $2 level. And then in 2008, that was our first big price rally that we had seen in a long time. And we had, over $7 corn and some friendlier fundamentals that started to emerge. And if you've been hearing or reading anywhere on the internet lately, the talk is that this year is modeling similar to 2008. And so what happened in 2008, there was a continuous slow spring rally that happened, with markets peaking earlier in the year and in summertime. And then look what happened though. You got these great high prices, and then high prices cure high prices, and things fell apart. And then you go into the period between 2010 and 2012, where the fundamentals started to get friendly. The value of the dollar was lower. The big fund money came into the marketplace and pushed prices up to $8. And of course, we had the drought in 2012, so that gave us the extra push higher as well too. Then, as you all so very well know, we had the period of a 6-year price low. And then this was last summer, when we really were scared that we were going to have this huge carryout of corn. China wasn't going to buy anything, and prices would go below $3, and then that all turned around quick. So we'll talk in a little bit about how high prices could go this summer, what could make them fall lower. If you've got crop in the bin, what should you be doing with it? And then if you are going to be growing corn or soybeans this summer, what you should be doing for some cash sales for new crop. First thing though, we need to really be aware of for soybeans, or I'm sorry, for corn, is the acreage number. So you can see how for the past 3 years, when all was said and done, we've been planting pretty much around 90 million acres of corn for the last 3 years. Now, at the end of the month, on March 31st, there's an important USDA report that's coming out, and it's the Prospective Plantings Report. And on that report, we're already expecting to see the acres number for the spring going to be bigger at 92 million acres. So that's already priced into the marketplace. And quite frankly, we need all of those 92 million acres of corn to get planted. So if on March 31st, they say, they meaning the USDA, if they say, yep, it's going to be 92 million acres of corn, the market will be satisfied with that information, because that means that we have to have perfect weather this spring and summer. Otherwise, we're at risk of a very bigger price rally. But if they come out with 93 million acres of corn, that's a little bit of a different scenario, and prices could maybe set back a little bit, because then it doesn't put as much pressure on summer weather. So be watching for that report. Again, it's on March 31st. This is a chart showing corn yield. So the red lines are the actual yield that we've had. And of course, the past 2 years, yield has been lower. 2019 yield was down just because we had that late planted crop, and then the test weight was horrible. So yield was lower. Last year, of course, we had that hot summer. And so that affected yield going as the fall progressed. So the USDA, for their data crunching right now, they are projecting trendline yield. They always start with a trendline yield, but they're using a little bit more of a conservative number for a trendline yield. They're not doing their crazy big yay, everything's perfect numbers. So they're being a little bit more conservative. So that's encouraging to me for right now, that we have a little bit more of a realistic expectation that, we do have a dry season potentially upon us with the drought that is currently in the United States, and that they've been a little too optimistic on yield performance in the past couple of years. Corn production, this is important to know because we grew last year about 14 billion bushels of corn in the country. So that's what we grew. But look at how much we use. So we used last year, the orange color is domestic usage. So that's ethanol, that's for feed, that's for food and industrial. And then the blue is exports. So we grew 14 billion bushels, but we used almost 15 billion bushels. So that's why our ending stocks have come down so much. We didn't have a big crop. We finally dug into the remaining crops that we had in the bins. And that's even with corn use for ethanol being down because of COVID. So it's been just a totally different scenario and picture. And our exports, we got to talk about this. Exports are at a record amount. And if you have been watching the news the last couple of days, China had a huge export sale of corn yesterday. It was the second biggest ever. And then today, they had another big export purchase of US corn. And today's announcement was bigger than yesterday's announcement. So yesterday's announcement was actually kind of priced into the market. We had been hearing rumors that China was going to be around buying, so that's why the market didn't respond to it. And today I'm a little surprised that the market isn't responding to the friendly news from today, but I think that has more to do with the fact that the US and China are getting together tomorrow and Friday in Alaska to talk. So the market doesn't want to get premature excited, like, we're going to fix the relationship there. It wants to see for sure what's going to be happening. But if you look at these exports, we are at a record amount projected for this year. And prior to today's sale and yesterday's sale, we are at 90% of the USDA targets. So 90% of 2.6 billion bushels of corn has got to be like around 2.2 or 2.3 billion bushels that's been sold on paper. And then what's actually left the country was about 50%. So we have actually shipped out of this country about 50% of this 2.6 billion bushels. And so we still have the rest of March, April, May, June, July, and then into August to get the rest of the corn shipped. So we have enough time to get those exports out of the country. What we're going to be watching on upcoming USDA reports is if they increase this category and maybe say that they were going to be exporting even more corn, or if they just leave it alone for a while, make sure that the corn that has been sold actually leaves the country. The ethanol use, of course, down last year because of COVID. So that's not a big surprise. But then now this coming year, we're starting to see expectations that corn use for ethanol is going to start to increase for two reasons. Of course, COVID hopefully is wrapping up here as the vaccinations are occurring around the world. But I got to tell you, I think it's going to ramp up quicker than that. When you look on Facebook and Twitter and Instagram, Lord have mercy, the amount of people who are traveling right now for spring break, it's like people are like, get me out of here. And, even me yesterday, I ran out to South Dakota to do some speeches, and I was like, I don't care if it's a blizzard. I'm going. I'm ready to get out of the house, and I want to drive, and I want to go somewhere. So I think we're going to start to see that demand just continue, and it's going to surge quickly. So the ethanol picture is still friendly. And the other part to the ethanol picture is that China has been buying ethanol, US ethanol, and we're expecting that to continue because they do want to start to have greener energy. They absolutely do. The other new thing is that they're starting to sniff around for Ddgs. So that's really encouraging too. So they need that feed over there for their livestock. Now here's one of the most important slides of the presentation. So what you need to remember about ending stocks is that this is what's left over at the end of the crop year, how much corn is left over. And remember, just 6-7 months ago, we thought that the corn carryout was going to go from like 2 billion bushels all the way up to 3 billion bushels. And we were on the verge of sub $3 corn. But then the retro happened. And then we had the USDA start telling the truth on these reports. And then we had Chinese buying, and we had the August weather. So it took a potential for 3 billion bushel carryout, and we're down to 1.5 billion bushels. It's very significant. It's very friendly. And so when we look ahead at the planting intentions report at the end of the month, here's what's important to know. If we have the 92 million acres planted, and if we assume demand is constant and that we start to actually see that corn use for ethanol demand category increase, even with 92 million acres next year, even with a trend line yield this coming summer, ending stocks for the following marketing year don't budge. We're still at 1.5 billion bushels. So if we have those 92 million acres and we have a weather issue this summer, watch out. That's going to light a fire under these markets. So just something to be aware of. And the stocks to use ratio, it takes into effect the chart we were just looking at, and then it divides up how quickly we're using up the remaining corn that we have on hand. And so you can see, this is important, we are at a 10% stocks to use ratio. This is significant because the only years where the stocks to use ratio has been tighter than what it is right now, and again, now these were final stocks to use ratios in 2010, 11, and 12, and 13, the final ones. So it's only March, and so our marketing year isn't done until the end of August. We're already at 10%, and so if it goes lower, think about what corn prices did in 2010, 11, and 12. Let's go back and look. Consistently $6 to $8 corn during those 2 to 3 years. So that's what a big deal this is. And I think part of the reason that the market prices have been doing nothing for 3 weeks is because we know we're on the verge of this potential breakout higher. But we also know if the US and China suddenly don't get along again, we know what that can do to the market. We also know that if we end up planting a lot more acres this spring in the United States than what Craig was anticipating, that'll help alleviate this tight supply situation that you have. So we're probably going to be stuck in the mud here for just a little bit for prices until the end of the month, but then I expect some bigger price swings to happen starting in April. Here's another one of my favorite slides, a reminder of where corn is grown in the world. So the United States grows 1/3 of the world's corn. So think Northern Hemisphere. China grows 1/4 of the world's corn, also Northern Hemisphere. Now the thing about China, it's kind of when you see this comparison, you're like, oh, they actually do grow a lot of corn. And now they're getting their hands on better seed technology and production capabilities and storage capabilities. So I would expect to see Chinese production of corn grow in the coming years. So this newfound demand that they have for US corn, I think it's good. It might be, I don't want to say short-lived, but over the next like 3 to 5 years, their production capabilities are going to increase. So that's just something to be aware of. But now we want to focus on Brazil. So Brazil grows 10% of the world's corn. 2/3, or actually no, it's more like 3/4. 3/4 of the corn that they grow is grown as a second crop. So that second crop corn is just getting planted right now in Brazil, and it's getting planted late because it's been really, really rainy and wet and flooded down there. So their beans are slow to get harvested. The second crop corn is slow to get planted. So now what's going to mean is that the second crop corn is going to be pollinating during their traditional dry season. And so they're at risk of not having the corn crop that they were expecting. And that's a big deal for their livestock industry. But then also a lot of that corn would get harvested in late July or August normally. And so if there was like a supply hiccup, or if we have a bad growing season, that Brazil crop would be like that 1 month buffer for the world. And so now we're at risk of it not happening. So keep an eye on the Brazil crop and the weather down there. China, let's take a look at this. Okay, so if you've seen me speak over the years, I think you kind of know my opinions on this. But since this is recorded, I'm going to keep them to myself today. And so back in October of 2018, so look in the lower left corner of your screen here. Back in October of 2018, I was all jazzed up because I was looking at this chart and I said, you know what? This is how much corn China has left in their country. They're under 60 million metric tons, and their stocks to use ratio, this blue line, is the tightest in history. So that's really significant. Like, we would have been on the verge of them needing to buy corn or have a new demand there for corn in the United States. So I was getting all excited. I'm like, hey, we got a bullish story starting to develop. But then seriously, like a week later, China went out and then they resurveyed their supplies that they have had for the 10 years prior. And so for whatever reason, they found corn, or they said they miscounted. And so their 60 million metric tons, wait for it, went to, bam, over 200 million. So it tripled. And that was totally a wet blanket over the whole marketplace. And what killed me was that the USDA, who was slower to agree with big changes like that, totally agreed with that Chinese news just days later. And so that was part of the reason why the markets just couldn't rally from 2018 and 2019, because there was this perception that China had all of this supply. And then, so that's 2018. And here's where they are at as of the most recent USDA report from last week. So on paper, the USDA says that China has just under 200 million metric tons of old crop available, which many disagree with and dispute. And then I think it was the UN's Food Organization that said no, they think it's more like 140 million metric tons. And then it makes no sense to me. You know, why is China buying all of this corn and sorghum from the United States if they don't like legitimately need it? So things just don't totally add up, but China's buying right now, and that's been helping push our prices higher. So as far as how much corn China uses, so remember, everything that they grow, they use. So they're on track to use about 280, 285 million metric tons of corn. And so that's why they've been needing to import recently, because with their bad growing season last year, I think it did, they did not have enough to meet their needs. Plus they're getting that hog herd starting to slowly rebuild it. They still fight African swine fever, but I think, you know, they're always trying to get a handle on it. So right now the outlook is still good for China needing to buy US corn, but like I said earlier, I don't know how long that lasts, just because China has said that they're going to try to be self-sufficient in wheat, they're going to try to be self-sufficient in corn, and self-sufficient in rice, but they will always be buying soybeans. World ending stocks on corn have been trending lower for 5 years, and it could be substantially lower if we actually knew what China had or didn't have. But we'll never know, quite frankly. So switching gears over to the funds. The funds are the big money in the marketplace. So that can be a 401k group. It could be a group of individual investors pooling money. They're in the market to make money. And they are essentially speculators, but they follow the fundamentals. And they're aware of what's happening with the marketplace. So the reason they're important is because they affect money flow. And sometimes when the market sells off, they push prices maybe a little extra lower than what the market needs to go. Or when we have a rally, they can push the market just a little bit higher than maybe what we would have had without them being a participant. So on this chart, here's what you're looking at. This essentially shows the position amounts of what the funds have had going back to 2006. 0 would mean they don't have any contracts on. So when the blue lines are above 0, that shows how many contracts, total contracts, that the funds have been buying or selling. So this is government regulated. Every Friday, the government releases a report that says how many contracts the funds have been buying and selling. We get a report on the commercials, like the elevators. So we know how many contracts they have been buying or selling. The industry is heavily regulated. It took 2 days to have this PowerPoint approved by not only my boss, but the governing bodies to make sure I'm not promising profits or giving false information out there. We are heavily, heavily regulated. So the funds are important because right now, they have been buyers in the market and they're long over 300,000 contracts of corn. But the new development that happened this week, so the development started back in January, but the release date was on Monday. The funds essentially for corn and their wheat positions. Like every person in the world can buy or sell contracts of grain, but there's a limit on how many you can buy or sell. The government regulated limit. And now that limit has been expanded to almost double. So before, when the funds had their longest position of like 400,000 contracts of corn back in 2010, 2011, now they could have almost 800,000 contracts of corn that they could be long if they wanted to, if the fundamentals justified it. But think of it on the other side, when they are sellers and when we have $3 corn and they were short 300,000 contracts. Well, now they can double the amount that they're short and really push prices dramatically low. So there is going to be some extreme volatility ahead now for the marketplace, even wilder than before because of this. So this is a very important thing. And we track it as a company. Again, every Friday that report comes out, you have access to it. So it's not a secret. The information is out there. If you have any old crop, right now you're probably deciding, okay, do I want to move anything out of my bin, or do I want to wait and see if the stars align? So if you're waiting to see if the stars align and that prices could move higher, what you're essentially waiting to see is, are we going to have 92 million acres of corn planted in this country, or is it going to be more? Is there going to be a drought this summer in the United States or not? Is China going to keep buying or not? Is China going to have a good growing season or not? So there are some scenarios that point to why prices could go higher, and quite frankly, why we could see $6 futures or $7 futures. There's a lot of bullish scenarios there. But as we all very well know, trade deal can blow up and then send prices lower. A black swan like COVID could swoop in and send prices lower, even though the outlook maybe had been friendly. So really be aware of the value that you have in your bins at home, and think about that. Because quite frankly, for prices to go higher than where they are right now, I mean, you have to have the stars keep aligning. So there's no way to know what Mother Nature is going to actually do here or in other parts of the world. Now for new crop corn, so what you're going to be planting this spring, I would say most producers are probably 25% sold because it's good value and it's profitable. So they've been making cash sales, and they are making probably $4 to $4.25 cash sales with the board price up near, I'm looking at my quote screen, Ddgs corn today is at $4.75 futures. So there's good value there. But again, here's one of those things where you're like, okay, if prices can go higher, how high could they go? So let me show you a little bit of technical trading price perspective. This little, if you use your imagination, you can kind of see how this would be like the letter U if you connect the dots. So that's called a saucer bottom or a rounded bottom formation on a chart. And when we see this on a long-term chart, what this means is that if the stars can keep aligning, it helps us project how high prices could go. So get ready. If the fundamental news suggests this, so don't be telling people Naomi's calling for these crazy high prices. because the stars got to align. But how high prices could go? So let's do some easier math. What's the difference between 520 and why I'm saying 520? Because the high from 2014 is 517. But let's just for easier math say 520. What's the difference between 520 and 320, which is about the price low that the December contract has had? $2, right? That's the difference between that value. So to figure out how high prices can go, you take the difference between the high and the low, which is $2. And then if prices can break out to the upside, if there's a drought, if China buys, if the value of the dollar stays lower, if there's bad weather somewhere else in the world, but the upside would be you add $2 higher to the 520 level. So 520 plus $2 takes us back up to 720. Could that happen this summer? Possibly. But again, it's going to be a weather-driven market and a demand-driven market that has to make that happen. Okay, any questions on corn before we move on to beans?
So if you have a question, you can either put it in the chat or you can just unmute yourself and ask the question. I'm not seeing any right now, Naomi.
Okay. All right, so we'll switch gear to soybeans. Of course, soybeans, equally as big of a surprise as what the corn rally was. So, you know, a lot of producers had planned already to sell their beans at harvest off the field. And they were like, hey, great, I got $10 cash also. So that's wonderful. You feel good about it. And at the time, the industry was not fully understanding what was happening. So the stars had been aligning this summer with the derecho storm, with the horrible hot August weather that we had and with China buying. And so that's what started that price rally. And so most producers in the industry, totally, we were all caught off guard by that, and producers feel like they sold too low. And once the market got through $10, I know a lot of producers started to get aggressive about re-owning it or buying calls and call options, and had been taking advantage of re-owning on paper to try to participate with the market. And so now here we're stuck. We're at $14. This morning, the May soybean futures are trading at $14.13. $14 is fantastic support, but we don't have any news to get us any higher at the moment. So what would that news be? Our export sales are amazing. We've pretty much met the USDA expectations, and we've shipped out almost all those beans too. So we're going to see if on the upcoming USDA reports, does the USDA make the soybean export category a bigger demand number? And if that's the case, ending stocks get smaller. And you've probably heard that, you know, are there any soybeans even left in this country for old crop? Have we had any demand price rationing for what's remaining there? So those are questions that are still out there that we're not sure of the answer to. Let's take a deeper look at the soybean fundamentals. It's a bullish story. There's no way else to say it. Soybean acres, of course, last year were down with some of the prevent plant that we saw. But now on this USDA report that's going to be on October 30th, they're expecting that the US farmers are going to plant way up here 90 million acres of soybeans. So that's priced into the market. And since that's been announced, soybean futures actually have been kind of keep working higher, old crop and new crop, because even if we plant 90 million acres of soybeans with trendline yield, the ending stocks improve, but not a lot. So there's really, really strong demand there for soybeans. We'll take a deeper dive on what that means. Again, with the USDA, they're using a conservative trendline yield estimate right now for summer production. So of course, all of that production can change going forward. But here is what we grew in this country last year for soybeans. So just about 4.2 billion bushels of soybeans. That's what we grew, 4.2 billion bushels. And then when you took into account the beginning stocks that we had the year prior, what we have on hand right now was about 4.6 billion bushels. And our usage is about 4.6 billion bushels too. So everything that we pretty much have, including what was carried over from the previous year, we're using. We're using up everything. And it's an equal mix between yellow is exports. Exports, of course, so strong this year because of Chinese demand. And the crush has been strong. The crush demand has been so amazing for soybeans. Bean oil was the leading component, the soybean oil demand, the canola demand, palm oil demand, just all of those edible oils right now are in such demand globally because every place around the world had a little bit of a hiccup with production. And Chinese demand has been that strong. So like with canola, China had been buying Canadian canola like crazy. So now the question for North Dakota farmers will be, are you going to plant canola? Are you going to plant soybeans? Are you going to plant spring wheat? Is your acre battle still happening in your state, or what's going to be going on? So it's a friendly demand story. And ending stocks, when you look at where we were just a few years ago when we had the trade war happening, you know, we're on the verge of a 1 billion bushel carryout. We had tremendous yields. And now we're like almost out of soybeans. It's just a night and day story. So on paper, we have 120 million bushels of soybeans remaining in this country, and that has to get us through harvest of next fall. Some people think that number is probably a lot tighter. The USDA will likely be a little slower to adjust that category because if they adjust it too quickly, then the soybean prices really take off higher. And maybe, I remember like, I think it was 2014 maybe, we were coming off of high soybean prices, but then the USDA didn't change the reports, but the cash market was on fire, like $2 basis over Chicago or $3 over on the river, on the Mississippi River. So it'll be interesting to see what the USDA does versus how the cash market handles things going forward. And here's our stocks to use ratio. We're tied for the second tightest in history. So again, that's a final stocks to use ratio. And we still have like 5 or 6 months to go over our marketing year. So it's a big deal. It's a very big deal. The more soybeans are grown in the world, this has really changed in the past few years. So we do grow 1/3 of the world's soybeans. Brazil now grows over 1/3 of the world's soybeans. So they matter. They totally matter. And then Argentina has almost 15% of total production. So with Brazil, they're on paper as having a record crop. But now as they're getting to harvest, because the harvest is delayed because of how wet it's been down there, some of the beans in the pods are turning to mush. Some of the beans have been sprouting like in the pod. So there's a lot of issues starting to come up, and we're not totally sure what they have or what they don't have anymore. So that's also keeping the market supported right now. Looking at China, China uses almost 120 million metric tons of corn. I'm sorry, soybeans. 120 million metric tons of soybeans. And, okay, come on, computer. They import 100 million metric tons. So they import almost everything that they use. And I don't blame them because now they have Brazil trained to grow a lot of beans. And we're trained and conditioned to grow a lot of beans. So they can get beans whenever they need from either hemisphere, a great production amount, a great supply resource from both hemispheres pretty much all time around the world. So I think that my opinion is that they're going to continue to do that, and they're going to do their best to grow their own corn and rice and wheat. Global ending stocks for soybeans is trending lower, just like it has been for corn. So that's also keeping the market supported. So if we do find out that there's legit production issues with that Brazil crop, that's going to just add more fuel to the fire and keep the bean prices really well supported. And soybean stocks to use ratio is actually as tight as it was from 2010 to 2014. So that's another reason why soybean prices look to stay firm. Front month beans, so that's the May contract. We are stuck at $14 land. If it can work higher, $14.50 is the next resistance point for futures, and then $15. Any higher than that, we won't know until summer because we just don't know for sure what's left in our country. New crop beans. So if you have beans that you're planning to grow, November beans today on the board are at $12.36 for price. And the high from 2014 was $12.80. So we have good value. And again, a lot of producers are about 25% sold with their beans right now because they know this would be something that they're not able to store at home, or they just want to move it at harvest time. But now we have this situation where, okay, if we can get through $12.80, we'll probably take a quick stop at $13, but then $14 is the next upside target. So how high prices can go this summer truly depends on, again, everything we've talked about, weather, how many acres actually get planted, US-Chinese relationships. That, again, that meeting is tomorrow and Friday. So there's a lot of opportunity there. And yes, the outlook is friendly, but always be thinking in the back of your mind, what could mess this up? What could mess this up? Because between the trade deal drama of a few years ago and COVID, we know that these black swans are legit and they're ferocious and they last for months. So always be thinking both scenarios. Any questions with beans?
So I had a question. I don't see any in the chat. I had a question back with corn that I apologize. I didn't ask back then.
Okay.
So you talked about how obviously China's importing these unheard of amounts of corn, kind of wondering why, what they're doing with it, where it's going. So I spoke a little bit to Frayne Olson about this, just having the same questions as someone that doesn't live in the corn market very much. And he mentioned their usage might be changing with African swine fever herd recovery. He said, you know, it might be more focused on quantity and less on genetic quality. So you might have less piglets per sow. So you're feeding more sows for the same amount of piglets. You might have poorer feed to gain ratios. So again, you need more feed to produce the same amount of pork. Do you hear about that, or do you agree with that, or do you think there's still, it's just not adding up?
I don't disagree with anything you said. I hadn't heard too much about it from the standpoint of, you know, maybe there is less breeding capabilities. So, but as far as the weight gain, that makes sense to me. That actually really makes a lot of sense to me. And with soybean price getting so high, so maybe they are gonna, you know, they've been buying sorghum along with the corn, and they've been buying, I think it's white wheat that's out of Washington State, and they're buying, importing that. So I think they're just trying to broaden their expansion of what they can use for feed. So they have it when they need it, where they can get it. But I'm curious. I'm going to dig into a little bit more about the hog information that you shared, because we know that African swine fever there is starting to spread again.
Yes.
But you know, we don't know now. Is it going to be better contained because they have built those big Hilton hog facilities? You know, that's you know what they're calling it.
That's funny.
So we're about to see what they can do. Have their all the efforts that they've done over the past 2 years, is that going to help their situation or not? And we don't know, I guess, is the answer.
Yeah, right.
Great
so
points.
As long as we're in corn, I see we did have one come in the chat about corn. So will China continue to rely on US ethanol and DDGs, or do you think they will expand their own domestic production of ethanol and DDGs?
Yeah, I think they'll eventually expand their own. They had, prior to COVID, I think they had 5 or 6 ethanol plants that they were building or that were running. So they are trying to move towards that. And yeah, what seed company do they own right now? Is it Syngenta? I'm not sure. I don't want to screw that up. Yeah, you know, so they have better seed technology now, and they are learning how to be better at producing corn. So they are they're going to get caught up. So I think that for the short term, they need to be buying from us, and they're going to be importing more corn. But for the long haul, I don't expect that to last. But I do think the soybean part lasts, because there's only so many tillable acres that they have there. And why not outsource the soybean part of it when you have two big countries in the world, on both sides of the world, who can deliver that product in a timely manner, because we're awesome, right? And that's what we do as Americans, get her done, and we'll get that product to China. So it's the bean story is still the friendly story in this whole marketplace.
So a question that I get, and I'm still watching the chat here, so don't let me dominate the questions, everybody. A question that I get from growers sometimes is, will we see ending stocks on soybeans go negative on the Wasde? And so the answer that I've seen given is no, you'll see it go zero, but you won't see it go negative. You'll just see the usage go up accordingly. So do you think, is that a thing? Does ending stocks go negative, or does it go to zero?
They won't let it go to negative, and I don't think they would let it go to zero, because they'll increase imports.
Okay.
They'll have us importing from South America, and then they'll really reduce demand. All of a sudden, you'll see the export demand category lessen up a little bit, or for some reason, maybe the short term, the crush would lessen for the very short term. So I don't think they let it go to zero. But the cash market may try to tell us it's at zero. And the cash market might try to tell us it's negative, but the USDA won't do it.
Okay. Along those lines, I thought of something else as you were. So we had a meeting with BNSF last week, and we were talking to them about how they're preparing for this coming season. And they said they have concerns about July, August, and finding beans come July, August. Do you think we will see some Brazilian imports come July, August, in that in-between time where, I mean, if there's any beans left to import from Brazil, if China hasn't bought all of those?
So BNSF, like the railroad?
Yes, they were saying, if they need to find beans to haul come July, August, is it going to be hard for them to find those beans?
Well, I think it's going to be hard, but I guess my thought is most of the beans that we've sold to China are long gone.
Yeah, I think that's.
So, there might be some extra last minute buying, but the bulk of the beans are gone. So, I'm thinking. I think the beans are going to be hard to source, because of clients that I talk to, most people are out, or they're holding on to 5,000 to 10,000 bushels.
Yeah. For a price spike.
Yeah. And they're going to let go of them on any kind of a rally. So I think you'll see a point where basis improves, the market rallies, but then what's left is going to come to market quick. But as a producer, you need to make sure that you're catching the window of, I'm trying to think, in 2012, during the drought, I think the imports started like in July. That's what started to break the market price. As soon as one of the big, it was like, because we were living in Maryland at the time, so we were real close to all those chicken facilities in the southeast corner of the state, and those are the ones that were starting to do the importing.
Okay.
So anyway, that's just something to be aware of.
Sure.
Okay. Great questions. Really good questions. Good conversation. I love it. This is why I like to work with the ladies. They ask the really good questions.
All right, we'll let you get back to it. I don't see anything else.
Switch over to the.
Oh, I take it back. We just got one.
Okay.
So here's a question we get a lot. With pipelines shutting down, how will rail transportation satisfy grain shipments? And Naomi, if you have some insight on that, I'll let you go, and then I can tell you.
I don't.
Okay.
I don't, because I've been wondering the same thing. I've had that conversation with my clients, and I'm like, I don't know what that does to the system. So, yeah, what do you think?
So in meetings we've had, again, we meet with BNSF pretty regularly because if you don't know, as a North Dakota grower, over 70% of your beans go on BNSF to the PNW. And so they are a major partner that we work with pretty frequently. And so they get this question obviously all of the time lately. And basically they talk about a few years ago when that was a major issue, when the oil industry in Western North Dakota was really booming and we saw a lot of rail competition. I remember I worked at a corn processing facility and we were fighting for rail cars to move our products. And so they said since that time, they have invested a lot in infrastructure of the railroads. So rails that used to be one way are now two way. And they've improved infrastructure to take on greater capacity, greater efficiencies. And so given that question, they've never expressed that it's a concern of theirs. They feel that they are able, obviously no one knows what's going to happen with the pipelines. We can all conjecture, but in terms of oil demand and balancing it with ag products demand in a year where we're probably moving an awful lot of ag products, it's not been a concern of theirs. So.
Awesome. That is good to know because I have had clients ask me that too.
Yeah.
And I was curious and I didn't know how to find the answer, but now I know you're my source. So that's awesome. Thank you for sharing that. That's good. That's good. Okay, well, great questions. So keep them coming in as we go. So I want to be mindful of time. It's 10:55 and then we have until 11:30. So we've got a lot to cover, but it shortens up here. I don't go into as much detail with the rest of the commodities. So with the wheat, wheat prices, of course, have been working higher. Wheat is still the follower in the complex right now between corn and beans. It's because of the fundamentals at the moment, but I think that's changing. What do we have here? Saucer bottom forming on wheat. So the biggest thing with wheat right now is that if corn and bean prices get too high, wheat becomes a feed substitute. The other part to that is that we've been talking to our clients in Kansas and other parts of the South, and they have flat out said if the wheat looks like crap when it comes out of dormancy, they have no problems planting sorghum instead, or corn, or something different. So wheat has maybe a fundamental story that's starting to get friendlier because of that. And then I think about the spring wheat acres. We have no idea really what they're going to be, especially with canola prices being so attractive and soybean prices being so attractive. So I think there's a friendly wheat story that's brewing, and it's going to be because it's going to be needed as livestock feed. Here is all US wheat acres. So every kind of wheat that's grown in this country, again, every year is like a record low for what we're planting, and this next year is no exception. So that has been supportive for prices recently. And our wheat ending stocks are coming down because we're growing less and because we're already seeing an increase in demand for wheat to be used as feed. But the world wheat ending stock situation is a little bit different. There still is plenty of wheat around the world. So that is why wheat is the follower right now in the grain complex. So again, I like all of the wheat. I like Chicago wheat, Kansas wheat, Minneapolis wheat. I think they all have some price potential to work higher in the coming months. Chicago wheat today, the May contract is at $6.42. So the next upside target is a retest of $7 and then the $7.35 area. But if it can get through there, there's some significant upside potential for that market. This is Minneapolis wheat. So you want to talk about a contract that has some price volatility. Back in 2007, going into 8, the reason that this market got so high was not as much to do with fundamentals, but more to do with trading and low volume and a few players getting squeezed and prices pushed higher and they were getting margin calls, but they were meeting the margin and prices kept going up. And so then they kept margining up and then finally prices came back down. So that was a whole crazy animal. So the next slide that I'm going to show you is that even though the wheat got to 23 bucks, I don't think that was realistic. So in the past few years, the high price on Minneapolis wheat was $11. And if you connect these dots, we've been in this kind of downtrending line. But here we have, well, actually back here is a bullish key reversal. That's a technical bottoming signal. Here's another one. And this is a flag formation. So if you could imagine a flagpole and then a flag billowing in the breeze, this is a bullish technical signal. So how high would the price breakout go? Take the difference between this low, 525, and the high, 650. That's like $1.25, right? So add $1.25 to 650. So 750, 775. You're essentially looking at the potential for $8 Minneapolis wheat. I think my opinion is that we're going to see that this summer. I'm very, very bullish to Minneapolis wheat because I think it's going to lose acres and the market doesn't know it yet. Kansas wheat, same thing, rounded bottom formation. And so, like I said, we've been flat out told by our clients that they got no problem ripping up that wheat if it doesn't look good coming out of dormancy. And with that, you know, every winter you kill wheat 5 or 6 times, but now they're actually concerned about it with that bigger cold snap that we had a few weeks back. So Kansas wheat has some potential too. I'm going to shift into beef, because that's a friendly story that's been emerging. This chart, I'm super bullish cattle for the summer and for October. So let me just say that quick. Beef production. The current year is this red line. And then the previous year is the yellow, and then the 5-year average is the blue. So beef production had a little bit of a dip. Part of that was that cold snap, but then it's been kind of high. You know, you got better production levels than what we've had recently because we have more livestock going through right now, but the demand is also strong. We're expecting to see production work lower into summer and fall. We're thinking that there will be less livestock out there. We're thinking that with as high as the feed prices are, is there incentive for, you know, reproduction in a sense. So the beef market has some friendly fundamentals, and with people getting their stimulus checks, we're thinking that they're going to blow it and buy stuff for the family, buy groceries versus saving it or paying off bills. And you know, the other part to it is that yes, the tourism industry and the restaurant industry were really hurt by COVID, but for those who were able to work at home, you know, they've been earning a paycheck, and some of those families are also getting stimulus checks. So it's like this extra cash to play with. So of course, some families, that money is absolutely essential, but there's some people who are really having a good time and going out with the stimulus money. And when I see on Facebook, like I said earlier, the people who are all over traveling for spring break right now, looks like there's been no problem with COVID or no money issues for a lot of the people in the country. So something to just keep an eye on. There's a cattle on feed report this Friday. We're not looking for any big surprises in it. So cattle prices today, let me see where that August board is, or the prices are at. April is up today. We're at 119. So we're trading a little bit higher than when I took a snapshot of this chart. And for the deferred contracts, you know, they've been looking good. They're at 120, 121. So I'm, again, really, really bullish for cattle for the longer haul. We'll take a quick look at crude oil. If you follow me on Twitter or on LinkedIn, I have been posting for a couple months on why I thought energy prices were going to rally, and that was even before the shutdown of the pipeline. The prices were able to get through $60 resistance for the futures price. Today, crude oil is trading near $65. The technical upside, because look at this. This is a downtrending line that this market has been in since 2006, 2007. And now we're finally above that. So to me, that means $80 crude oil is going to happen by summer. And can prices go higher than that? I'm not sure. That would be fundamentals that we don't really know at this time. But there's some pretty serious technical momentum building there, and global demand for energy is getting stronger again as we come out of COVID. So that's, if you haven't booked your energy needs for the farm, if you are in a situation where you can, I think I would. Value of the dollar overall had been lower this last year, so that's also what helped our export market, because when the value of the dollar is down, that makes it easier for other countries to import our products based on the currency exchange rates. So we want to keep an eye on the value of that dollar. Okay, so any questions on any other commodities or commodities at all? Okay, so we'll kind of wrap it up here for the home stretch. You know, I've been at this for about, oh, there's a question coming through, I think.
Yep, I see just kind of an update on canola if you have it, Naomi. If you don't.
I don't.
Okay.
All I know is that the demand continues to be strong. And I saw on Twitter, I think that would be your best place to look for something. Just go on Twitter and search hashtag canola. And I think there'll be some charts that pop up on there, because we can't trade it for futures. So that's why I don't know it as well as I'd like to. But I know that the supplies are lower and the demand is strong.
Yeah, I mean, one thing we haven't really talked about is the renewable fuels market. And renewable diesel right now is such a hot topic, to the point where the Wasde is saying this spring you're going to see it on the demand sheet. And so obviously canola and soy are both major feedstocks for that. And so in terms of demand for renewable fuels, I don't obviously work with canola, and I don't want to give anyone any insights into canola, but in that way, we're seeing a lot of potential for demand.
Yeah, and I'm glad you brought that up, because that would be a new, not new, but like an additional game changer from the demand standpoint that's not priced into the soybean market. We have been, you know, hearing about it. We know that the demand is there, like out in California, for biodiesel, but does that grow nationwide, and does this administration try to implement more of that? So if that happens, that would be very, very friendly for beans, and that would keep soybean demand and soybean production, and making sure we have all those acres for soybeans, something that has to happen every year. So that's definitely something to watch, definitely. So like I said, I've been a broker for 20 years, 17 years with Total Farm Marketing. We used to be Stuart Peterson, same owner, same company, just fancy new name. But these are the 5 tips that I've seen that help people be better at marketing, or what makes people who have been, in my opinion, good at marketing. These are the things that they're doing to make sure that they're good. So we'll hit them here quick. Biggest one is the emotions of marketing. And prime example, I should have known that there was a major low happening in the market last July and August, because when there's market emotions, and I got to be careful how I word this, so I got to really be careful about this. Okay, so when prices are high and working higher, you know, hey, optimism, excitement, sweet, yay, farming is fun again. And then when prices start to work lower, you're like, oh, crud, should have sold everything sooner. Now I don't know what to do, so I'm not going to do anything. And then when you get down into this price point, sometimes producers will then be over aggressive with their sales, because they're like, never coming back. Market prices are never going to come back, so I'm going to sell it all. And usually when we start to feel these feelings, or when we hear it from our clients, we, in hindsight, know that a major low is coming. And so I had clients who never, ever, ever made big cash sales, ever, of large increments. Last summer, all of a sudden call me and say, hey, I'm making a 50% forward contract on my total corn production. And they never, ever, ever would have done that before. So, you know, we talk about pros and cons, and well, if you do that, make sure that, you know, you think about reownership. And I don't know, should you not? But when people get emotional, they either don't market, or they do market too much or too little. So really be aware of that. And I think right now we're probably in this category for this next marketing year. So what you're going to be planting in the spring. And so just remember, when you start to feel like a rock star and that everything is great and we're going to have high prices forever, that's probably when you want to be thinking rationally about how can you lock in those sales. So this is one of my favorite slides to talk about with producers. It just really helps to be aware of what's going on with their farm. Great marketing is a controlled decision. And so if you've done the classes that I've taught in Fargo, you know what it looks like. We do math along the whole wall of the room, and we talk about cash sales. We talk about what a future contract looks like. We talk about if you bought a put, if you bought a call. And so if you can make marketing as boring as possible and just bring it down to the math basics, that's what's going to give you discipline with your farm. That's going to help make it black and white about should you be making a sale or not. And this is where producers become successful, because it helps to take those emotions out. Like, you already have a plan with those charts I showed you earlier. If new crop bean price can work higher, and if the new crop bean price can get up to, let's say $13, you already know how much of a forward contract you're going to be making. So do the math. It's really important. The next thing that you need to be aware of is your constraints, or what's holding you back from being your best. So having that awareness of your emotions is huge. Some producers just don't feel like they're knowledgeable enough about the markets and what they should be watching, or how futures or options work, or how even their cash market works. So knowledge is something that you can definitely overcome just by spending more time with markets and marketing, or if you need to hire an expert, then definitely take a look at that route. Risk tolerance is another factor. So you and your family know with your business if you can take on risk, if you should be doing different types of crop insurance, and if you do any trading, do you have a risk tolerance for futures? Does your lender understand what you're doing and why? So that's something that I help clients understand also. And you need to make time for marketing every day, pretty much these days. If you can't do 10 or 15 minutes a day, make sure you're sitting down for a good half hour to an hour every week and just look at what are the facts right now, and think about what could mess this all up and send prices lower, and be thinking about that. So that way, if it happens, you're ready to react and make some sales. And on the flip side, thinking about, yeah, the outlook is super friendly right now. How high could it go? And do you want to capture that upside, and how are you going to capture it? So you have to really balance all of what's ahead of you and not just rely on the outlook part of it. And discipline is definitely important as far as pulling the trigger on your cash sales and planning ahead how much you're going to be selling. And then, of course, if you've had any bad experiences in the past, sometimes that helps. It helps you have a better future, and sometimes it holds you back from having a better future because you're stuck in something that's happened in the past. Like maybe you made a forward contract and then you didn't have a big growing season, so then you were stuck, finding grain to deliver on your contract, or coming up with cash to buy out of the contract. So there's a lot of, how farming is. There's so much that can happen out there. Know your cost of production. You would think that would be an elementary thing that every producer does and knows how to do, but you'd be surprised at the ones who maybe just don't have a deeper handle on it. So take screenshots of what I'm going to share next, or I think, Jenna said she's going to have this, that you can access it again, but really understand your income, not just with the crop, but any government payments or other types of payments. And your cost of expenses is, it's huge. It's really big. So this is something I got out of Kansas, but I think NDSU has some really good information you can access that helps with cost of production sheets. So reach out to them and their extension, because I'm 95% sure that I've seen some of their materials in the past. It's really good. So here's all your cost of expenses you know, most of these and really take into account like fuel, how that could go up right now. Can you lock it in? Propane, think about that one even, because China, as they were coming out of COVID, bought crude oil, they bought US propane, they've been buying energy. So actually, one of the guys in the, here's a little personal information, I'm in 2 bands, a great band at church, then we have a garage band. And so the bass player in our band is a propane manager in a regional facility. And so he's like, no, there's going to be a propane issue because China's been buying all this propane. So be aware of that. Keep an eye on that. Cost of living for your family, kids are expensive, right? So be realistic about what your cost of living is. And they're always talking about inflation right now. And so cost of everything is supposed to be going higher. So do your best to have a good handle on all of those input costs. And with your cost of production, know where you're selling to, how you're selling to them. Keep an eye on your basis levels. Sometimes they might have a better price, but is the trucking line forever long and you're there the whole day? What fees are they charging you for their services? Are they nice to you? And all the contracts that they offer. And are they going to help you manage it? So that also, in a sense, goes into your cost of production because of the payment you're receiving back from your elevator. Make your marketing plan. So again, take time once a week to be thinking about where you're going to be selling, how you're going to be selling it, how much you're going to be selling it, and watch these fundamentals. So everything that I've shared with you today about supply and demand and watching weather around the world and the importance of political relationships around the world. Keep an eye on the dollar, because again, when the dollar is lower, that's good for our export market. It helps us to export more product. Energy markets, ethanol, biodiesel. I think it's going to be a very dynamic 2 to 4 years that we have here with the marketplace. The fundamentals are really starting to shift. The world is changing, and there's going to be a lot to keep an eye on. And of course, we talked about the funds and how they've got more buying power and more selling power. So that's a big deal. And the seasonal price patterns too, keep an eye on that. So yes, right now, the outlook in the market, super, super friendly. But outlook is just a small sliver of the whole pie. I mean, you got to use strategy. So we talked about, you know, what can make the market go a little bit higher or a lot higher, but also be thinking what's going to mess this up and take all this opportunity away from us. So you're always ready for whatever unfolds. And when you're making your cash sales, think about your weighted average price. So if you're making a 10% sale, if you're making a 20% sale, if you're making a 5% sale, what does it mean for your whole family business? And then execute the plan. So use your strategy, stay disciplined, stay consistent. And if you ever need help with anything, always ask. There's plenty of advisors in the industry, plenty of people in your local cash markets. You've got great resources in North Dakota with NDSU and the Soybean Association and the soybean growers and everything that you have there. You've got lots of help. So always ask the questions and don't be afraid to say, oh, this question is stupid. So let me just let you know, like, I was the kid in college who sat in the front row of every single class, and I asked questions all the time because I'm like, you know, I'm paying for this. My parents are not paying for this. I'm paying for this. So I was there to ask the questions. And you want to know what? After every class, someone would come up to me and say, oh, I'm so glad you asked that question because I had that question too. There are no dumb questions. Ask your questions all the time. It's really important because this is how you get paid for your hard work. And y'all work so hard. So make sure you're asking those questions. Okay, so I think we have a question coming through.
All right, we have a question. So question is about oil. So where is all the soybean, sunflower, canola, and palm oil going? And why are we seeing oil shortages?
Okay, so for palm oil, they had a production shortage because of weather and because of COVID. They had less workers. So that affected palm oil. here in the United States, because our crop was a little bit smaller last year, that's what pushed our prices higher, and the demand has always been there. China and Southeast Asia, they are the biggest buyers and users of food oil. So that's where the demand is. And then just with that little bit of a lower production between palm oil and soybean oil, that just was the right combination to get the demand categories higher. And also coming out of COVID, people are starting to go out to eat more, so the demand is there. As far as like crude oil and things would go, OPEC has said that they're not, when COVID happened, OPEC really cut back on production. And that's, remember we had negative crude oil prices. And they have, as a group, said they're not going to raise production yet. And so then here in this country, with the pipeline shutting down, of course, that's going to affect things. And then a lot of little places around the world maybe haven't ramped up production yet in the aftermath of COVID. Demand is growing as we're getting back on track. So it's kind of a combination of a little bit of everything right now.
Great. Any other questions? I'm looking through, seeing if anyone's coming off mute.
Okay. Yeah, so that is all I had for today. Again, thank you for the opportunity to be in front of you. And if you have questions, you can, here's my email address down here, naomi@totalfarmmarketing.com. Just shoot me an email. Or if you follow me on Twitter, you can DM me, direct message me on the side. I'm definitely happy to respond and do anything I can do to help.
Yeah, if you guys don't have Twitter, so I was very anti-Twitter when I started this job. The guy that had my job before me was like, Jenny, you gotta get Twitter. And I was like, I don't want it. I don't need another thing. But I will say that when it comes to ag news, I see it on Twitter before I see it anywhere else. It's amazing. And there's a few people I follow. Naomi, I'm sure you follow like Karen Braun with Reuters. Yes. Yep. So if you're on Twitter, follow Karen. In fact, I'll try to put her handle in the chat here. So, I mean, if you're not on it, you don't have to be active. I don't really tweet things, but definitely
the news. Yeah. Current
good to be in on the conversation. So,
yeah.
Anything else for the good of the order? I don't see anything. Well, I just want to thank everyone for being here today. Really fun to be a part of this women's event as a fellow woman in ag. So I know we plan to do this again next year, as long as Naomi will have us or join us. Hoping to be in person.
Yes. Yes.
So with that, I did put Karen's Twitter handle in the chat for everyone, but this is recorded. So you'll be getting an email from me with a link to the recording on our website. You'll also get a survey link. Would really appreciate if you would fill that out. It's not only about this event, but also if you can tell us about other things you really want to have a seminar on or a little update on with these virtual platforms these days. That's a lot easier to organize than it was in the past. So let us know how we can help. That's why we're here. So with that, thanks everyone again. I'm going to close out the meeting. Thanks, Naomi, for being with us today. We really appreciate it.
Thank you so much. It's fun. Missed you, girls. Hopefully can see you soon.
All right. Bye, guys. Have a good day.